Hello, hello. Good morning, good afternoon, good evening, depending on your time zone. I'm your host, Peter, and we are here to look at a couple of the instruments that we have and align ourselves on how to trade. So I'm starting with DXY. Now, we are at a point where the market is giving us a 50-50 probability. The 50 probability of market going to the downside, or that means the dollar falling immediately, or the probability that we might still break up one more time. And I'm going to explain that. And when we have this scenario developing, you have to really be careful, because what we expect is for dollar to fall, but it might not just be in the immediate. You must have at the back of your mind, and dollar may also start falling. You have to also have that at the back of your mind, that dollar may also start falling. So which means that if you are going against, or if you are going to in the direction of the dollar strength, that must be very temporal. So what you want to do is to look to sell off the dollar. So let me use that word. So which means that if you are thinking that dollar, if you want to go in the line of dollar going up to break the top, if you are doing any trade, you should have been in the buy from this level or from this level. And if you're in the buy, you have to trade your stop loss. Otherwise, if the dollar begins to come to the downside, you are going to lose. If you are holding a sell off from here, fine. If the price probably will climb up to around 111 area, let's see if that is possible. 111 area or 110 plus area, we will see. Now, when we talk of wave and the way wave, builds up, we know that it's like a repetition of what you have on the very low time frame, in cycle. It goes on until you have a much larger time frame, formation. That is what, and that's how it develops. So what you see on the 1, 2, 3, 4, 5 on the small, even if it's corrective, on the minutes, the 5 minutes time frame, the 15 1 hour time frame, it builds up and repeats itself on the 4 hour, on the daily, on the weekly, and on the monthly. That's the way it builds up. And that's why we call it a broccoli. But let's go back to the motive wave. When motive wave, one develops, it's rather corrective. Of course, you have your 2, which is also corrective. Now, the peak of the wave is at 3. That's the peak that you can get. What do I mean? Let me bring out my drawing. I want you to understand what I'm trying to say. Let's bring out this drawing. Now, look at this channel, for example. So, the first impulse got to this point. If you lay this here, this is what you would expect. Normally, I want it to be at least near perfect. Okay. This is what we expect normally for price to do when you are still within wave 1. Okay. So when you are still within wave one, price would respect the upper boundary, you know, one and correction and all of that. That is what you expect. And price eventually will play out of that boundary. So the peak of the upper boundary is set by wave three. So if you are looking for wave three, this is not your wave three. This is your wave three because it's going to break out of that channel and the boundary created by wave one and wave two. So even if you pick from here, so now price coming here now tells you that this is the upper boundary. We would not expect that price is going to play in the upper zone here anymore if indeed momentum is being lost. So it picked up with the momentum, started trading very close to this boundary, came down to the middle zone. If it had come here, we'll say, oh, probably price wants to break down, but price went back, broke beyond that boundary to set a new boundary, and price came back to test this support. Now, if I want to do what I did with the upper boundary of the channel, I could actually bring this also to this point. Good. Good. This is the way the channel would have started. The channel would have started this way from the low boundary of wave one to this point, and price played pretty much on this upper part. Price came down to do a wave two here, because in this time frame, this will be your wave two here now. Price went up, played in this upper zone to do your wave two without breaking here. Then your wave three broke completely out of it. And after your wave three, you had your four. This could actually mean your fourth wave, because you will see that it broke a bit outside here for the first time. You can see it broke a bit the way the third wave did break outside here. Fourth wave also broke a bit outside here. Then we now have the fifth wave playing largely, because that is what fifth wave will do. The third wave, the first wave, they will play at the upper part. The fourth wave drags it to the lower part. From the fourth wave, then it's going to remain at that lower part until we see a breakout. So this breakout marks that this channel is not operational again. So something else is building. So we are clear here that this is a breakout of this channel and something else wants to start. So if I take this back now to accommodate all of that I explained, so it is clear to us that something new is here, because I don't expect fourth wave to have fallen off like this. So this may just be the beginning of a new wave. And there is no way you can come here and say you're going to accommodate this and do like this. Or you're going to draw a channel that is not parallel. So it's going to, what I'm trying to say, okay, let me show you what I'm trying to say without wasting more time. You can't possibly have drawn this like this. You cannot draw that like that. The reason is that your fourth wave here is clearly away from the base, and it didn't test the base of this channel in the blue. Then you add your wave going up and that this one is coming to test the channels. Even if we want to use that, there is a whole lot of clearance around this exam. This has played most at the upper part of this blue channel, and we are seeing this. So if this is the blue channel is what we're going to take, it means that price will go up one more time before it breaks out, and that is it means that there's no momentum loss if you're looking at this blue channel. You know, from the upper part here to this point, if you draw it that way, then it means that you've forgotten the history that is being built right from here until we add this. So it feels like, oh, it's a new move that we are just picking and we are having a retest and it's going to burn off, and that is going to take a lot of time. So that if you are thinking that way and you are aligning yourself on the blue part, it means price is going to break out of here. Before that happens, before you see a momentum divergence that will take the price, you know, to break the blue, price is going to go up and take the top. So, but that is not what the price gave us. We have to respect what the price and the way we interpret, you know, what the price had done within this frame of work. Now, coming back to this is what the price had done. Momentum has been lost. We have seen it at the lower part of this channel and the breakout of here. And we will need, of course, to break out of this fourth wave here for us to know that we are completely out. But then we had seen a breakout of the fourth wave within this zone of the fifth wave itself. It's like we saw a 1, a 2, a 3, a 4, and a 5. So this is the third wave, this is the fourth wave, and this is the fifth wave. That is what the wedge, that what was anticipated. That was how it came about. That was the wedge. That was the wedging from the third to the fifth wave, and the wedging that broke the price to the downside here. So now we are seeing this move. We are seeing the formation of this. When you see this on the weekly, on this support, it's rather confusing. On this support that we are seeing this price action here. Can you see this price action very well? So when you see this from this support, yeah, it could mean that price may want to break up because it's so solid and to push the price up. But what I can see here for now is more of a consolidation. We may be spending a little more time here before we break to either side we want to break to. We may be spending a little more time here. So now, what do I see here if you want to interpret the next move? If you want to interpret the next move, now we are seeing that what the price had done in the last week is the price first came down here, used this place of 109 as a resistance. Price came down to around this area to give us a support. Let's use this in green. Those areas, let's use green. So those areas are now support. The support here in the green, the lower side, it forms the resistance. So this resistance, the support zone here, where you had this wave WXY. So we are about breaking, of course, we are even broken W support to the downside. I'm sorry, yes, W to the downside. So this may just be our Y. Now, in navigating next week, what we can hope for is we're going to look for a breakout, a daily close. We're going to look for a daily close. as we are building. We are going to look for a daily close. Now, if price should come and close above 109 and you have a daily close like this, closing above this line, it means we are bullish again. Now, price is kind of going to the downside right now. What you should expect based on this, now, if we are going to be bullish, we need to see a daily close above this area. We need to see a daily close above this area. This is the weekly candle. So we are trying to map out and navigate using the weekly candle to know what to expect on the daily, because the daily is what will set a tone for the direction. So now we need to go above here. So if we should see, if you go above here and close above here, tells you we are going up to break the top. Now, immediately, if we see a daily close above 108.100, if price should close above here, it means we are going down. But if price would close well below here, let me give you. If price should close below, daily close below this red line, I will use red for it. If we should have a close below this red line, on the daily close below this red line, we are bearish. So we need a close within this space. A daily close above here, the body of the candle closing above here is bullish. The body of the candle closing below here is bearish. So if I now go to the daily time frame now, for us to see, I need to put this out clear, because what the price is doing is so confusing that you need to be careful. Now, this is what I've said within this frame. Let me go back there and draw so that you can understand what I've said. Let me go back to the weekly time frame. We need to know how to navigate. The point where we need to decide what is going to happen is this. That is going to come within this area. So let's now go to the daily time frame. Now, this is the area we need a close. A daily close above this area is bullish. To test this area, and a breakout confirms further bullishness. Now, and we said a daily close. Now, the price at even daily close below here now. So if we push below here and close below 107 is bearish. So we had seen this price action. If this close like this, it's a bullish sign that we may go up. It's a bullish sign that we may go up. So what we should think that price wants to do is actually to correct. Price may correct and go back to the downside. So we need a bullish a daily close above this area to hold before you begin to anticipate that you're going to come to this area and break to the outside. So we see a scenario that is building up here as a possible, corrective mode that might take more time, but whatever it is, we have to be prepared for it. We have to be prepared for it because this may well just be a wave 1 and a wave 2 here. And when price is going to fall, it doesn't fall easily. They are taking this deep. They are taking it very, very deep. If you look at it, in terms of wave count and retracement, fib retracements, this is just around 88. It didn't actually get to 90 here. So it's kind of, very, very confusing because we would have thought that it shouldn't break here, but they had gone to grab liquidity, but immediately the price closed below 76. So where the price closed is more important to us, so, and we don't expect price to close above this anymore. Price should not close above this area anymore. That is what we can say. Price should not close above this area anymore on the daily time frame. So talk less of price. This is no go area for price for now. In terms of price coming, this is no go area for price now if we are to return bearish. So on the daily, that is what I can see. On the DXY, we need price to later come back here and close below here for us to go return bearish. But a daily close above here, you need to watch price. Now on the 4-hour time frame, what do I see? I can only think that we are correcting to the upside. So you should expect that this is a corrective format to the upside, where we are seeing this as a possible A and as a possible B and a possible C that should not break here. That is what we can expect. And at this level, you can watch for your price action to begin to sell dollar. But a break out of here and a close outside here, a daily close outside here on the daily candle, not 4-hour now, on the daily candle means that we may break up. So for now, see this as an opportunity for you to short this market. A, B, and a C. If we go to euro dollar, euro dollar also will present us with the same scenario is developing here on the euro dollar. Where do we need to take action here on the euro dollar? The same thing it's developing here. So the same thing is developing here. The price on the weekly time frame, the price had given us this boundary on the weekly time frame. And these are the boundary that the price had set for us on the weekly time frame. If I may use green, just like I did. Now, we now need action in between this zone. We need actions in between that zone. We need a daily close above 1.0350. A daily close above here would give us, will open up this area here. A daily close above this area will open up this area for us to continue to push to the upside to buy. Now, a daily close below this area, will give us more potential to break this area. That is what we can see. But in terms of we trying to read candle, it's looking more like price has this tendency to go bullish. That is what I can see. Price had been forced down. You know, the seller came in with this, price had been forced to the downside. And if that would happen, if we are going to close below here, the daily close below here will give us a potential around this area, and which means that price can come to parity around 1.000. So that is possible. Price may come around this area before we push up. But we need, it's a crucial movement, because this, if that happens, this becomes your fourth wave proper, because this would have been your wave 3 here, and this may just be a wave 3, 5 of 3, sorry, a wave 3, 4 of 3, and 5 of 3, and this may now be our fourth wave. Then we are running wave 5 to the downside. But if wave 5 had finished here, then this should be going up right from here. So it's 50-50. We have to pay attention to, are we going to see correction, or are we going to see an impulse developing? So if we turn to the daily time frame, now on the day time frame, that is where, you know, it's, you know, we saw a reaction here that pushed and forced the price down. The price would have to close below here. If price should close, daily close below here, a daily close below here, it's opening price to the downside to fall the more. But if price should go up and close above this area, again, the price is setting for a bullish move. So that is what we are saying. So we need to see how price is going to close daily in this area to open up this area and probably break this support for more downside. But if price should close above here on the daily, so 10350 is an area to watch daily close for more potential to the upside. So we need to see that. And it's 50-50. You have to be very careful, because if you are selling now, you don't want to see price come here. So you should be guiding your stop losses at about 1.044 if you are coming to the downside. So if you are coming to the downside, and as a matter of fact, you don't need price to break 1.04150, this area. Price should not come and take this area if you're already in a sell. because ultimately what we want to do is to buy. If you're in a sell, I don't want to care if you cannot put your stop loss around this area, you are playing with fire. Because if we are going to break down the downside, price should not come here again. A break out of here is bullish, so we need to watch for that. So on the 4-hour time frame, if you are trading euro dollar, we are seeing this as a possible correction to the downside for further push to the upside, except if this would turn bearish or impulsive. So for now, we take it as a correction A, B, C to turn up. That is what we should do. Just like the inverse of the DXY, we should take this as an A, B, C correction to turn to the upside. But anything, if it's impulsive, then you know that that is now bearish. So what do I mean by that? The most you can expect here now is a zigzag to the downside. That's the most you can expect, a zigzag to the downside. If I use this from this point to this point, that's the point of your A, your B, and your zigzag to the downside will be anything in between here, the point of A, back to B. This is on the 4-hour. So it means that you should see your price not testing lower than this area before it pushes back up. That's 1618. That's 1618. You should be ready. The price may just spring back on you anytime because it has broken 100 here as an extension. So we are saying that we don't expect this to break beyond here if we are going to go bullish again. So that means an A in an impulsive A, a corrective B, an impulsive C, and price should turn to the upside. And within that frame, because what we see more of this could be our wave 1, this could be our wave 2 to the downside, that it didn't take low of here, and we may say this may be something that looks more like an impulsive, an ABC correction to the downside. So we have to be very careful going to the next week, that what you want to do is you want to pick a buy from here and with your stop loss around this area because you don't expect a break below this area. If it turns impulsive and is going up or is going down, then it takes you out on a small loss because what we expect is a break to the upside. And anything is 50-50 around this area because the way and manner this one also went to the upside looks like more of correcting the move to the downside. And if that happens, this turns to your 4th wave and wave 1 of 5, 2 of 5, and 3 of 5 going to the downside. So I won't call that for now. So you must know that this is the likely scenario that could play out. If this turns impulsive and break below here, then you are going to sell the more. So, and you're not going to lose anything. All you can do is to look for, as you're selling, look for your 4-hour resistance zone to hide your stop loss. Like we have hidden one here right now. So let's see how this one is going to build around this area to look for probably, if for further fall, if it's going to fall the more. If it breaks down, then it's going to fall the more. That's the way of trying to make it clear to you. Now, if you look at NZD USD, the weekly time frame, all these things could change. Of course, we expect a more like a bullish move. We need price to go and close above this area now. We need price to take this area to the upside. We don't want a daily close below this area. We need price to actually close above this area to open up more potential for us to buy. We should expect reaction between this area. We should expect reaction between that area. We don't want to break low for now. So all we can apply ourselves is to look for a correction. We need to see a correction. We need to see this as a possible correction to the downside. So that's the way we can align ourselves that we are correcting to the downside. And if it turns impulsive, then it's a sell. But for now, we are looking at the possibility of we grabbing a more buy. That's the way to align ourselves. So we must be open to these two scenarios playing out. So if it's going to play out like that, we should expect that price may still take this area before it goes back up. Price technically may still come to this area before it goes back up, and a break below this area, a daily close of candle below this area opens the lower part for a further fall. So that's what we are saying now. So a daily close below this area, price may come to this area, still push back up. It doesn't really matter because what the price is doing right now, it's so funny that we have to be very careful because this does not even form. So this, okay, this is around 85. So it could be a zigzag correction to the downside and price may be pushing back up from here. So that's what we can see. Price may not even come to this area to break this area. And if you look at the kind of correction it would have given us in the O from this push to the upside, that may just be almost enough. It may break slightly to around 50 before it push up. That will be around 50 here. 61.8, price may not do that. Even if it comes to this area, we don't expect price to break this low before it goes back up. A break below this low and a daily close, price is going to break down again. So we can only entertain that we are correcting the first arm, the second arm, the third arm to buy. You don't want to continue to sell from here with what we are seeing. So we may go for a buy more. This may just open up a potential for you to look for a buy here. And we just, tight stop loss around this area. Maybe about 35 pips, from here to the downside, and see what is going to happen. So if indeed this is a C wave, then you have to begin to count it as a C wave to look for a potential bullish move. Now, let's look at USD dollar yen. Dollar yen itself also, two things are likely scenario here. Likely scenario here is that I've been in a sell from here. I'm out already around this area selling. So the likely scenario that may play out here, because this is actually falling now, what is giving us is quite funny. This is largely corrective. This is largely corrective. Largely corrective. So we don't expect a break below here. A break below 148,700 means that we are bearish. So otherwise, what we are seeing here, we are seeing the likelihood of an A wave, a B wave, and a C wave to the upside. That's what we are seeing. This is too corrective, very, very corrective. But it may also develop into an impulse, really. It may develop to an impulse. We need to be careful here trying to trade this. We need to be very careful trying to trade this. And for you to have that confidence to trade dollar yen, because this is like we are trying to buy. So what you can do here, let's see if you want to trade it. What you can do here is potentially to think that to say this is probably the end because it could change. I hate it when price is just giving us, lots of mixed signal. How you can apply to trade this is more like looking at, looking at this as where you don't want to break for now. If you break up from here, it's bullish. You look at this as potential AB wave. So we're looking at this as an A, a B, and a C wave. And if indeed it's like that, it means that if it's corrective, price should not actually take this low. Price should not even come here because 1618 has even broken low. You can see 1618 would have broken low. So we expect price to turn, at some point. Let me print out something here. That should not be a place for price to break because 1618 retracement there is non and void for the price. So if the price is reacting around this area, then we want to see that the price probably will continue to push up from that area to the upside. Can price still come down here? Maybe possible. Price may still come to this area before eventually it bounces up. So in this mode, this could have been your A, B, and a C, and price will just do a little correction and begin to go up. Because even if this is just your fifth wave here, another thing you can do, if it's your C wave, so you can begin to negotiate this as a possible C wave. If you're going to do that, to look at this as a possible C wave, then this is the best way to do it. I'm taking more time. We are taking that as a possible C wave. If it's a possible C wave, the price came first down here. This will still be part of this wave in a way, A, B, C, and the low of this B wave here, sorry, low here, upper height here, then we now begin to see this move. This is the first part of this wave. This is the second part of this wave. We need to set that clear. So that will be the second part of that. The first part of this new wave, A, B, of the C wave. Then we can now begin to look at this, that if it's a C wave in that regard, if it's a C wave, price should be reacting. Price should not break below here. This should be the last bus stop. So if you are buying this, price should not go below here. If it's a C wave, if this is an A, B, and a C wave, if from here to here is a C wave, price should not go lower than this area. So it should be going up. That's what we can say here. Price should be going up. But a break below here tells me that this has become impulsive. So a further correction is for us to sell. So that's what it can mean. That's the only thing it can mean from here. Price breaking below here is potentially opening up for more further downside. That's what I can see here. Another thing is for us to say, okay, the B wave here has ended here. And that is more like a more contraction as an A B wave, and this is part of the C wave. Even at that, if it's part of C wave from here and a part of C wave, which is possible, it means that potentially it's right on the dot. The price should not break here. That's 1618. So whatever it is, price should not take this low. A break below here tells you price is actually bearish. So in terms of trying to look at overall retracement, this is 16 point. In fact, this is an all-time low. So where I put in the red, price should not take that if the price actually wants to break up again. So price should not break here. So you don't want to if anything break below here, don't continue to sell. Watch for price to correct to the upside and look for further down. If price should break this area, watch for price to correct and look for. So price, if it breaks low here, is going to react at some point before it breaks this area for a much more deeper correction before it falls. So that is what to expect. So it's dollar yen is very, very tricky. Until we break this low, that's now signal that we are going further to the downside. If we look at pound USD, pound dollar is also the same. It's also the same. The same it's giving us. This has broken up, and that's why pound dollar look more bullish. So, and that's why if you are going to, with this price action, this looks more bullish. So this is giving us a recipe for downward correction to go long. If price is going to fall from here, I won't say it's not likely. It's not that it's unlikely. Price may do that and still break this low, but will react around this area and push up. But this is a recipe for more bullish move. So if we go on a 4-hour time frame, so on a 4-hour time frame, after this initial move, a break to the upside, this may just be our A, our B, and our C to the downside. That's what I can see now. That's all I can see. It may take this low or not. It may take this low or not. So if potentially we are to go, because that's the move here is such that we have to be very careful, because this may just do this. And come back here to give you potentially price may turn to the upside from here. From this area. So you're going to watch this area for a potential move to the upside without breaking this low. Without breaking this low. And if price should take this low, then price is going to go much more deeper. The reaction, because price had broken this top and we're having a deep reaction, so look for your buy around this area without breaking this area. And that point is how many pips? About 50 pips or thereabout for a further push to the upside. That's what I can see. The market looks more bullish than bearish. And if they're going to do that, then we'll see. It looks more bullish. This is like an ABC, the way it turned, and price broke the top again. So price breaking the top has set a tone across board for more bullish move. If pound could do this, break up like this, forget about this move, the first thrust, and this is an A, B, and a C around this area for a further move, push to the upside. And the last one we're looking at is gold. Regardless of what other markets are doing, I'm not inclined, I don't feel like I should sell, I should buy gold. I don't think I should buy gold. You have to be very careful buying gold. Very, very careful buying gold. This is the area, this is the wave we are looking at now. We are seeing these as a potential correction of fourth wave and a new wave on ABC of 2. And this wave 3 may have just about been ended. We need a correction similar to this or similar to this to the downside, as this as the support area and the fourth wave before I will need to see that. I may not sell it. I will need to see that deep correction and look for a potential buy to break the top. And breaking the top, we may now be pushing close towards 3,000. I would rather want to do that. But for now, to buy from this level is suicidal. That's my own take on gold. I don't see a further bullish move here. It can start any point in time. The correction may start any time to the downside. And you should watch for that. You should watch for that. Price had done this. A break below here tells you we are in a deep correction, a much deeper correction. So a break below 28.34, then we'll probably push price for us towards 28.70 or thereabouts. Or 27.90, yes. 27.90 area might be an area that price may react again around this area for us to push to the upside. If I bring out my drawing, the wave here 1 to 6, 1 to 2, 1 to this is 1618. Price almost kissing this area. We should watch for what price is going to do. It may just be like price on the 4-hour time frame is going up the last time to probably come close to this area or slightly break it before that move to the push the downside. So we may be seeing this as a 1 and a 2, probably a 3, a 4, and price will decline. So we need to pay attention to whatever is building around this area. I don't want to buy from this area. I think these are the last move here to finish up this. We may be seeing an ending structure here developing for us to sell. But a break below here is a sell for me for that correction, bigger correction. So with that, I've come to the end of today's. It's long because I had to tell us that we have to be very careful trading into the next week for what potentially may happen. You don't want to sell USD, euro dollar. You don't want to sell pound dollar. You don't want to. If you must sell them, you must sell them short with your tight stop loss, knowing that price may bounce back on you. That's what it is. And if price now continue or choose to continue to go to the downside, we'll take it. It means that price want to test the last low on euro dollar. If that happens, and all other structure instruments. Apart from that, we are looking to go bullish. Bye.